Everybody, this is Bennett Tchaikovsky. I got an email from a viewer here that had a question regarding it might be a CPA review question. Not sure exactly what it is, but I'm going to give my best chance to kind of go through and answer this. I don't hold the copyright in this. I'm just helping out a viewer. There you go. So I want to make you this. This is the question. I want to make you a letter aware of a letter I received regarding Fortis Company as we. Basically, as we heard in early January, on January 2nd, year 5, Fortis has been very slow in paying its outstanding receivable balance. Therefore, we recorded an allowance of 50% of the outstanding $250,000 balance on the year-end financial statements. According to the letter I received from the claims court, we will receive a check for $10,000 related to the outstanding payables with TTI. To give you context, 250,000 was AR, 125 was already posted as an allowance, but we received a final payment with 240,000 of bad debt expense. How are we going to record the allowance balance and then finally write off the account as per the question? Okay, so let's kind of write this out first. So when we have accounts receivable in the prior period, this is kind of what went through and happened, right? So I have over here my balance of accounts receivable and the allowance of doubtful accounts. I'm assuming that this has been 50% reserved, not looking at any other things. When we get over here to year 5, right, this is basically my beginning. The ending balance of my accounts receivable becomes my beginning of a following period. Right. So these are my beginning balances, like year 5 beginning. And we'll just kind of put this over here. So at this point in time, right, I know that everything but 10,000 of this 250 will not be collected. So what I'm going to need to go through and do is I'm going to need to write off 240,000. The way I write off an account receivable is by debiting the allowance for doubtful accounts, and then I'm going through and crediting accounts receivable. So over here, I would be crediting accounts receivable for 240,000, and then debiting the allowance for doubtful accounts over here for 240. So this is how I would go through and write off the receivable. So I have to basically take this off of my books, and this would basically be whenever I would know it. When I collect that final 10,000, I'm going to be debiting cash and then crediting accounts receivable for the 10,000. Now, the alternative way to kind of go through and do this is that if the check is basically going to be coming in from the claims court, right, then what you may do is you might want to write off the entire thing, right? If we went through and did that, I would probably, I don't think I would really change what I'm doing here, but in any event, I would basically do this part over here. Then this is when I receive cash from the claims court. And this is going to be the write-off of the AR. And so this is basically when I collect the AR from the claims court, my balance here is going to go down to 0. Now, this is fine. Now, when we look at this, though, over here, in terms of the allowance for doubtful accounts, well, we currently have an issue because the other basically concern was be like, well, if I'm out of business or if I have no other receivables, then the amount that I'm going to come over here and credit for the allowance for doubtful accounts is going to be my amount that I'm going to record to bad debt expense. So in this case here, this would be, so I would basically credit the allowance for doubtful accounts right over here. So I would basically say, okay, bad debt expense, and then ADA over here for 115. Now, if there were other receivables in here or something like that, that would obviously kind of go through and change, but this would basically be my entry to bad debt expense. Note that over here, because I've already reserved for it in the prior year, I would have recorded bad debt expense, crediting the allowance for doubtful accounts. Usually there's going to be more, though, than just this one particular thing. But let's have some fun. I'm going to plug this into my AI app and see what my AI application says. Okay, so I put this into my AI app, and then this is the one I have links to this, and you can basically, if you search my videos, you should be able to go through and find this. So you need adjusting allowance for double accounts, record the write-off of the receivable. Here's how you can handle it. AR from Forbes, ADA, 50% of AR final payment received. So record the write-off. Since you already set an allowance for 120, but you received 10,000, this changes the net write-off amount. The remaining uncollectibles 240. Debit cash, credit AR, debit. Yeah, so they're doing it in one where I basically went through and did it in 2 steps. So this looks like it's the correct way to kind of go through and do it. Again, I'd be really curious to know if the way that I went through and solved it was the same way that the review course that you're going through and using is having you do it. But in any event, good luck on the CPA exam. Pass that test and become a CPA. And I look forward to seeing you on the next video. Have a great day.